Rebecca Walser. All right, Rebecca, I think you were looking for a hawkish cut. Everyone was kind of looking for a hawkish cut. It wasn't really, I don't think it was a hawkish cut. And now you do say he's opened the door for a Santa Claus rally.
Yeah, absolutely. I mean, obviously, you already saw it in small caps. They obviously, reacted positively. Anything that makes investment cheaper is going to make equities, more attractive. So I think that it's accommodative Fed means that we could absolutely have a Santa Claus rally.
So, and next year, of course, we get the Trump Fed in there, so it's going to become even more dovish. So maybe that's one box we check right there. We get the jobs numbers on Tuesdays and some more economic data. If that's the case, an accommodative Fed, we've got these tailwinds, one big beautiful bill and all these other things coming in. Seems pretty positive then for the markets.
I would think that would be the Trump's administration price to perfection. I do think that there's a little bit of more consternation at the Fed with the actual presidents that aren't, nominated. They're actually just the presidents, and they seem to be a little bit more in the reserved kind of not cut camp and a little bit more concerned. So we'll see if Trump gets what he wants with the new Fed chief. We'll see.
Oh, we'll see. He better. Oh my God, if he doesn't, it's going to be ugly. All right, let's talk about the AI trade for a moment because, it's stalling a little bit here, even though the market's making new highs. I love the fact the market's making new highs without the, 7 stocks just moving away.
Absolutely.
So your assessment now, the AI trade stalling a little bit.
I mean, this is normal. This is absolutely normal. And when you've had massive returns, even just since April, you've got to give investors time to digest. You've got to get hyperscalers time to settle down and actually see how's monetization actually coming. So investors cannot expect it to be nothing but up and to the right. It's going to be 2 steps forward, a step back, 3 steps forward, 2 steps back. That is what it's called when you're on a new frontier of technology. That's how it goes.
Right. But you're confident overall.
Absolutely. This is the beginning of the largest change in the history of time. So it is just begun, and we have a long, long runway. All
right. Speaking of history of time, gold goes back to the history of time. You were loving it down here when no one else was loving it.
I know. 2020, actually.
The gold's made a huge move.
Yeah.
I mean, I guess the question is not necessarily will it keep going up, but will it outperform? Do you still think it can outperform, or will it get a little bit more pedestrian this route?
As long as central banks of the world want to keep printing, Charles, gold is going to be a stalwart of true tethering to real hard asset value. And so as long as we see the central banks continuing to be stimulating and accommodative, like our Fed is turning to, we just pumped in billions of dollars in the last 2 weeks from the Fed. We went from QT to QE again. So as long as we've got central banks being quantitative, easing, and accommodative, yes, gold is going to be a solid barometer.
All right. Well, the answer is yes. They're going to keep accommodating. All right. Let's talk some stocks here.
Yes.
I think you've mentioned this one before,
yes,
right?
I have. Yes, I do.
So this was a recent IPO. Like always, hot IPOs. It came down a lot, made a big bounce, and pulling back here a little bit. What did they do?
So basically, they're cybersecurity, and they're basically cheaper than their peers right now. So we think they do have some room to grow. They did come in at the hotter end of the IPO, obviously retrench and came back, but we do think that they're a value play here. They are trading a little bit less than what their peers are, so we're excited about that.
So you like the value his situation. Trade Desk is an interesting stock, and I'm going to put a chart up here, but I probably should have gone back even further because this was a sizzling stock for a few years. All of a sudden, they had a couple of misses, and they just can't get its footing. We're talking about down from 55 to 35, right?
Yeah, it's off its all-time high.
So you obviously think it's oversold.
We think it's oversold, and we think that because it's oversold and their revenue projections, we think it's worth going in, yeah.
Another stock here that's not oversold. I was kind of surprised to see this one on your list.
To sell. This is a sell.
This is a sell.
A sell
okay,
again.
A sell. Okay.
This is a sell.
Because it doesn't go with the others, right? They don't Sesame Street
with the others. Yeah, this is a sell.
But how amazing! I don't think anyone at home will realize this, that GM has gone from 35 to 81 just in the last couple of years. And people still like a lot of these. Someone earlier today said they like the way these automakers are acting.
Listen, if you just look at how much the stock has appreciated this year, it's down over 50%, so yes, it looks like it's a great time. But what I look at, Charles, is it has a 1.60% profit margin. It's spent over $40 billion since 2020 on CapEx just to keep up with the EVs and production. So that is not a recipe that can endure. And so for that reason, I don't think it's a winner.
A couple of months ago, you said the same thing with Netflix. I kind of thought you were nuts. And now all of a sudden, Netflix is really starting to fall apart. Are you still short that?
Well, I'm not short it, but I mean, with the Warner Brothers situation, we'll see what happens there.
I mean, honestly, I think the Warner Brothers situation reveals a sort of desperation for them. YouTube is eating everyone's money.
I agree. Absolutely.
Let's talk about the tax planning thing for a moment. What should people be doing? Okay, you made a lot of money this year. That's one of the things that you do with your wealth management business. Obviously the standard tax loss harvesting, that's all normal. But what I would also say is I would really encourage
encourage the people watching at home, go in and look. Hey, Trump has got some new tax cuts, some new tax incentives. Look to see if there's something that you can do to buy the government out of your ERISA managed or qualified accounts. That's your 401k, your Simple, your SEP, your IRAs, all